There are a number of different contribution types that you can make to superannuation, and the better the choice you make, the greater your financial benefit will be. So it only makes sense to understand which type is the best for your situation. I have created a number of videos already explaining and comparing different super contribution types. However, we have had so many changes to superannuation, contributions, age limits and dollar limits. Therefore, it is essential to update this information that I provided in my videos before. Today, we will concentrate on contributions to super that are called concessional. I will briefly explain different types of concessional contributions to superannuation and concessional contribution cap, and the changes that have been introduced, legislated and out now in force. My name is Catherine Eastbrand from About Retirement. I'm a certified financial planner, and you are watching About Retirement TV, the place to learn how to be well prepared for your future retirement or how to improve your retirement if you're already there. So what exactly are concessional contributions? Well, concessional contributions are all those contributions for which tax deduction is being claimed either by your employer or by you. By receiving tax deduction on those contributions made, someone received a tax concession for the balance contributed, hence the name of those contributions being concessional. So what type of contributions are concessional? There are three main types of concessional contributions. Number one, superannuation guarantee, ASG. Number two, salary sacrifice. Number three, personal contributions for which you claim tax deduction. As I don't want to overload you with the amount of information and changes introduced today, we will concentrate on superannuation guarantee only, and next week I will complete explanation of the remaining concessional contributions. After that, we will discuss non-concessional contributions, and at the end I will compare them to see when to use which one. I think this will be of great assistance to many, as I can see lots of confusion and misunderstanding, which only creates loss of great benefits that are available to every single person working in Australia. So number one, superannuation guarantee or SG. Well, who is eligible for SG? If you need to understand what superannuation guarantee is, please watch one of my very first videos, What is Superannuation, Part 1. Some limits are out of date, but general explanation is still very valid and will explain most general information about superannuation as your retirement fund. Since creating that mentioned video, there have been many changes introduced to SG contributions. Until 30 June 2022, the eligibility criteria was all Australians over age of 18 that were employed with income greater than $450 per month were eligible for SG contributions. From 1st July 2022, the earning limit was removed. Therefore, now every eligible employee, regardless of the amount of they pay, will receive their superannuation guarantee contributions. This is great benefit for part-time, casual and seasonal workers. This change was announced with the May 2021 federal budget. I have created a full video going over all those changes recommended in the budget that could impact your retirement. So have a look at Federal Budget 2021-22 for pre and post retirement. What is the rate of SG in 2022-23 financial year? Another big change is the superannuation guarantee rate increase to 10.5% of your gross income, including bonuses, commissions and loadings, depending of course on your agreement. The rate of employee contribution is to continue increasing by 0.5% a year until it reaches 12% in 2025-26 financial year. If you are below the age of 18 or if you are working privately or as a domestic worker, for example like a nanny or a cleaner, you are eligible for SG if you work more than 30 hours a week. Since 2013-14 financial year, people over the age of 70 who are still employed are also eligible for SG. If you run your own business through proprietary limited structure, therefore a company structure, you are required to pay SG for yourself to your super fund, as legally you are an employee of your own company. If you are self-employed, your super contributions are entirely voluntary. Temporary residents working in Australia are also entitled to receive SG payments into their super account. If you are uncertain whether you are eligible or not for super contributions, there is a special online tool provided by the ATO where you can check your eligibility. I will provide the link on my website as well as in the description below this video. There is also an additional tool to estimate your superannuation entitlement, and I will also include a link to the ATO page where you can report if your employer has not been paying your superannuation guarantee contributions for you. What is the limit of superannuation guarantee? It may surprise many, but yes, there is a limit as to how much can be contributed to superannuation as your SG contribution, which is called Maximum Super Contribution Base, MSCB. For the current financial year, 2022-23, it is $60,220 per quarter, which is $240,880 per annum. What that means is that if your income is greater than the listed quarterly maximum, your employer will only contribute the maximum of $6,323 per quarter with no further SG liability for a higher income earned. The MSCB does not apply to an industrial award or enterprise agreement. Now, this is the question that I get very often. What happens to my super if I work several jobs? Well, there is no problem. Just provide each of your employer with your choice of the super fund, or your employer can easily find it through the ATO website. This is also one of the changes introduced so people don't end up with several small superannuation accounts only for your savings to be eaten away in administration fees. One thing to remember though is that the annual limit for the all concessional contributions is 27.5 in 2022-23 financial year. Therefore, if you are a high income earner and it is likely that all your employer contributions could take you over that annual limit or a concessional contribution cap, then you can apply to opt out of receiving some SG contributions from one or more of your employers. There is a specific form on ATO website called Super Guarantee Opt-out for high income earners with multiple employers. Once you submit that form, you will receive a certificate of exemption to be provided to your employers who you've decided to opt out from. So how are SG contributions taxed? Well, all SG contributions are taxed at the 15% concessional contribution tax. They are paid from the before tax money, therefore, when comparing to the level of tax that otherwise would have been paid, should you receive that money as your pay, for most workers there is a great deal of financial benefit to contribute to super. However, if your income is greater than $250,000 per annum, then you will be charged additional tax of 15% on your concessional contributions above this income level. This is what is called Division 293 for high income earners. What is the annual concessional contribution limit? As I mentioned before, the limit for 2022-23 financial year is $27,500. What is the penalty for exceeding the concessional contribution cap? Well, it might surprise you, or maybe not, but keeping the concessional contributions within the cap is your responsibility. It is not your employer's job or the tax office job to keep it within limits, but yours. I actually see it more often than I would have expected, people paying more than the contribution cap to their super, which in most cases happens in the salary sacrifice arrangement. If this is your situation, please be very careful not to do so. Therefore, if you go over the concessional contribution cap for the financial year, the excess amount contributed will be included in your tax return as your assessable income, and you will pay tax on it at your marginal tax rate. When calculating your tax liability, the tax office will recognize, however, the 15% contribution tax you have already paid on your excess contributions and will give you the tax offset. The tax office will then issue an excess concessional contribution determination and will advise you of what you need to do to rectify this situation. If you find it difficult to pay the additional tax, you can decide to withdraw up to 85% of your excess concessional contributions you've just made, or you can leave the money in your super fund and pay the additional income tax with your private money. If you decide to leave the excess contribution in your super account, that money will then be counted towards your annual non-concessional contribution cap. As you can see, there is lots of information to comprehend just about the basis of superannuation guarantee and concessional contributions. But it is essential for you to understand how those contributions work, as they are the basis of your superannuation balance. As for majority of people, this is how over the years our superannuation savings are being built up to eventually create our retirement income stream. If you enjoyed watching this video and found this informative, please give it a thumbs up and subscribe to my channel not to miss my next video. If you wish to learn more, visit my website aboutretirement.com.au, where you will find hundreds of articles, videos and additional tools to assist you in your understanding of your financial options. And while you are there, don't forget to sign up to my newsletter that will keep you updated with all the changes happening in Australia that can impact your retirement and your financial planning. If you find choosing the best strategy a little bit overwhelming and would like to go over your personal circumstances, just book a consultation with me. On each page of my website, there is a button, Book a Meeting, that will take you to my personal calendar where you can choose the date that suits you to have a good chat with me about your situation. And now I would like to invite you to watch those previously mentioned videos, starting with Superannuation Part 1, that is in simple English explanation of basics of superannuation, how it works, contributions and why use it. Second recommendation is the video Federal Budget 2021-22, for pre- and post-retirement, where you have a list of changes that government either wants to introduce or has already done so. I will speak with you in my next video. Bye!